Okay, Japan just gave an alert and it's kind of put a lot of banks and financial institutions on red alert right now. So we're going to go into that today. We've got a lot to cover. It's probably going to be a longer live stream than usual, which I know a lot of you actually ask for all the time. So we'll do that today. Firstly, I just want to say happy Memorial Day to all of my American subscribers. I know it's a very important day to remember those who lost their lives serving in the military. So important day, and I hope you all have a wonderful, wonderful day. So let's get on to the Japan crisis then, because they really are sounding the alarm at the moment, and there's crisis meetings going on in banks, financial institutions all around the world at the moment as a result of what is taking place. So I'm going to try my best today to simplify a somewhat complicated situation, but it's all around bonds or the bond market and what this is doing or what it could do to your savings, to your mortgage, to your loans, car payments, interest rates, everything. So there's a lot to talk about. A lot of it is complex, so I'm going to try and simplify it. I've taken all the complexity out of the way here. But the main thing is most investors at the moment are completely unaware of the scale of just how big this crisis is. And if you want a kind of an overview summary so you have context for the video, governments are issuing more and more debt. It's non-stop. It's just going on all the time. And up until now, people would purchase that debt, whether it was someone like me, whether it was you, whether you know it or not, could be through your pension, it could be a different way. What's happening is we've sort of reached that kind of peak now, and the demand on government bonds is waning. So there isn't the same amount of demand. And as a result of that, yields are rising. Now, that's bad because it pushes up, and it's not always the case, but it pushes up mortgages, it pushes up interest rates, it pushes up all sorts of other things. So this whole, smoke and mirrors they've been talking about for a long time in terms of pushing interest rates all the way down to zero again. I just can't see this happening with what's happening with the bond market. The bond market tells us what is going on, not the media, although you'd think it's the other way around. So people are just completely unaware of the scale of what's happening here. The bond market then, the long-term yields are rising because investors know that this debt is becoming more and more risky because we're reaching that spiral stage of the cycle where eventually governments won't be able to service this debt. So this is right across the major economies, by the way. It's not just Japan, it's the United States as well, can do it for a while. The UK, the Eurozone, we even have it in some regards for Canada, Australia, New Zealand. It's right across. I'm just going to go on to the next part here. So Japan's 30-year government bond yield surged to an all-time high last week of 3.14%. This was following an bond auction that no one really wanted. The 40-year also hit a record high of 3.6%. Now remember, Japan is the largest bond holder of the United States debt. So what they've been doing, and this is really crucial, they've been selling off. So Japan, the institutions, sold off $119 billion of US treasuries in one single quarter. That's a huge amount of money, absolutely huge. Remember, they hold somewhere around $1 trillion, they're the largest holder. But if they keep selling off bonds, you're going to see a crisis that no one will be able to stop. President Donald Trump won't be able to stop it. Jerome Powell won't be able to stop it. No one of these central bankers is going to be able to stop it. No one will. So this is the big problem we're seeing. They tried to raise 30 trillion yen, so $289 billion, and they're really struggling. If it just goes up, you imagine if interest rates just go up by a tiny amount, what would happen? It would be absolutely crippling. It really would. And They said as well the situation is mirrored in the United States, where Treasury auctions are also showing these strains. $16 billion auction last week of 20-year Treasury bonds didn't have the same demand either. So we've now seen the 30-year Treasury yield breach 5%. So this is going to affect long-term borrowing. It's going to be a big problem. As confidence in government debt declines, borrowing costs could rise further. So this will exacerbate these problems even more. And again, the UK is in this debt spiral as well. So this is happening everywhere at the same time. Okay, so what does it mean for you as an investor then? This is probably, if you are an investor or you've got a pension, this is what you want to know. What does it mean for the sovereign debt markets? So when you hear sovereign debt, by the way, that means government issued debt like treasuries or Bank of England issuing bonds. That's what it means by sovereign debt, because you see that a lot. It means that it's going to be critical for fixed income investors. It says here in black and white to adapt your portfolios or your pension before this landscape shifts even further. It says investors, this is the recommendation, investors may need to reassess their fixed income strategies, and absolute caution is required due to the substantial risks across the Western world right now. So they're also talking about potential bank failures that could come about as a result of this. And we saw this with Lehman as well. If you remember Lehman Brothers in 2008 and what happened there, where these AAA rated bonds all started to collapse upon themselves. Now, I just want to be clear, I'm not saying this is going to happen right away. You don't need to pause the video right now and call your broker or anything like that. But what I am saying is you've got to really pay careful attention to this, because this is really happening at a very, very fast rate. And I know I've mentioned before, but if you haven't looked at the information page yet for the brand new gold and silver course I've released, definitely have a look at that. Definitely check that out, because, and again, I'm not saying go 100% into gold and silver. Just to be really clear, I'm not. I think everyone should hold a bit as part of a diversified portfolio. Now, whether you do that with some gold and silver coins, if you've got a small pot, or whether you are quite wealthy and you need to diversify in a different way, then you've got different strategies for that. You can even do bullion-based pensions, you can do allocated vaults, unallocated vaults, you can do all sorts of things. I know people are going to say, drop in the comments here, they're going to say, if you don't hold it, you don't own it, right? And that's true up until a certain extent. But, you know, there's some people that have a lot of money, and you're not just going to keep huge gold bars at your house if you live in certain areas, right? So there's a lot of other strategies you need to think about. And also another thing, people are asking about the raffle this week. The raffle was won by Franco. So Franco was the winner of the raffle. But I just wanted to show you the gold and silver prices then. You can see just this week they've risen again by 2%. So that's what we've seen this week on the euro. British pounds as well, it's similar, 1.94%. Silver price has gone up by 3.31%. So you remember last week I said, watch the silver price. That's actually gone up by 3.31, 2.2 in euros, but it's gone up by, actually, it's just shifted as I refresh there, 3.87 on the week. It must be having a slight run today. Yeah, okay, it's spiking today. Here we go. Isn't that interesting after what we talked about on Friday and Saturday? So keep your eye on silver as well. But I would definitely recommend that you look at the gold and silver program that I've built for you. This will solve a lot of problems. It's not going to solve all problems, but this will definitely help you. And there's a payment plan on this as well now. And then we'll talk about the national debt very shortly. But I would say be very careful. You don't just want to be 100% in anything. I know some people say, I'm 100% in crypto, I'm 100% in gold, I'm 100% in this. You never want to be 100% in anything. You want to have diversification across your portfolio. And I would say right now, if you're going to lean a certain way, you want to be looking at tangible stuff, tangible assets. You want to be looking at that pension pot that we talked about. and just making sure that pension is not just in high risk assets right now. Because if this starts to tumble, and again, I'm not saying it's going to happen tomorrow, I'm not saying it's going to happen the next day, but eventually we're already seeing these cracks since, well, we could go back to 2008 when we saw the cracks, but 2020, 2021, they did something to the currencies with all the new printing and creation that is almost irreversible. You're not going to be able to reverse 40% of all US dollars that were just created. In fact, let me show you the debt clock now. Let's just look at this. Remember when we did that video and I said, I cannot believe it's now $30 trillion. Well, that wasn't long ago. It's now about to hit 37 trillion. And with this new big, beautiful bill that's being created, it's going to be even higher than that. It's going to be absolutely enormous. So you've got to really start looking at these things and protecting yourself. So let's continue on with the bond market here then, because the bond markets are absolutely in revolt. It's true. And a global reckoning is coming. It's being reported everywhere. This is a Telegraph article. That's what it says. It says a global reckoning is coming. And this just came out a few hours ago, actually yesterday evening. So what did they say? I'm just going to highlight a couple of key points that was written in this article because I think it's quite key. Britain's fiscal predicament, and then we're going to go back to the US and Japan, and we got some other things to talk about, is continuing to deteriorate. Despite the pretense of fiscal responsibility, the government keeps on granting public sector pay awards and bumping up the pay, of course, for themselves as well. And this is well in excess of what has been budgeted for. Across the Western world, aging populations, I'm going to make a video on that as well, just to show you how long it's going to be before we're already in a crisis. The birth rate is dropping off a cliff for a number of weird reasons. But we're already in this crisis and it's only going to get worse. But we're seeing aging populations. We talked the other day about the pensions now being inverted. So we've now got not enough workers to support the pensions, which is why the pensions are dying and they probably will not pay you out. I know it's a strong statement, but I stand by it. They probably will not pay you out by the time you retire if you've got a bit of time left. That is why I have my own pension. I built my own pension and I wouldn't rely on these pensions that you get given through a lot of them workplace as well. I wouldn't rely on them. I wouldn't at all. I don't think they're going to be there by the time a lot of people retire. Analysis from the Office for Budget Responsibility said that public spending over the next decades is going to rise all the way up to 60% of GDP, but there's no way to fund it. As a result, public debt would rise rapidly all the way through to, they've put it, 274% of GDP by 2075. Well, there's no way you can forecast out to 2075. They couldn't even do it from 2020 to 2021, let alone 50 years in the future here. But you can't manage on 275% debt to GDP. Japan can, and they have been, because it's a very special case of what they do, and they hold a lot of US debt, so they get a lot of support, shall we say. But even looking at the chart here, you look at Japan, it's at 235. I know you can't see it too well because it's a tiny, tiny chart, but that's Japan right there. And then as we go down from that, we have Italy 137%, the US 123%, France 116%, Canada 113%, and then the United Kingdom at 104%, and then we have Germany at 65%. These are the GDP, the debt to GDP as a percentage is already too high, and none of these governments seem to want to do anything about it. They think the solution is to spend their way out of a debt trap. Where have we heard that before? Actually, in the new program, in the first couple of modules, I was talking about the history and historical context behind gold, which has been used for thousands of years to shore up economies, and the debasement of the currencies and how they mixed it. And I've actually got some coins here that I was using for the videos just today that I was filming, showing the different silver content as you went through the periods and showing how the breakdown correlated with some of the history books here. And you look at the dates in the history books and you see the silver content. It's a fascinating thing when you start looking at all of this with the debt and what was going on at the time. Perfectly correlates to today with the conflicts and the debt levels and the taxation levels and the breakdown in public trust of governments. And we know how these things end. I mean, probably one of the worst ones was the French Revolution. let's not have one of those exactly like that again. That was chaos. But there's a sort of old saying, if you follow your economics, and it says that if we look after the present, the future will take care of itself. Well, not really, because what's happening at the minute, they think that printing their way out is going to solve this problem. It's just not going to solve it. The past week has seen even more bond market fluctuations and crises. They talk a lot about the US and Japan, but there's others going on as well. The UK isn't quite there, but there is a crisis underneath, bubbling away. The supply of debt, he says it as well, what I've just said, is now beginning to outstrip the demand. There just isn't enough demand. And then I want to come on to what the BRICS nations have just announced as well, and what the ASEAN alliance has announced, because this is like a massive attack on the US dollar at the moment. And it's kind of that forecast I made last year that we would see an attack on the dollar by the alliance, the sort of Eastern alliance, shall we call it, that would come. And I said that it would be very well timed. So it would be timed at the time that there was a debt crisis beginning. And that's what we're seeing. And they're being very clever about how they do it with their bond dumping. And I'm not including Japan in that. They're the outlier. They're not part of that alliance. But they are dumping, which I think is to shore up the yen. I don't think it's to... I saw some reports this week saying they're dumping because they want to move closer to China. I don't think so. I think Japan, if they wanted to do that, they would have done it a long time ago. So I don't think that's what's happening. But the chart again on the national debt here is going up like, this is the hockey stick that we talked about before, where I said that you'd see it and it would just go off like a hockey stick. Well, that's what we're seeing now. It's going off like a hockey stick. And the more debt they create and the more currencies created, remember, the harder it is to service that debt. Especially if interest rates rise, it's going to be harder to sell the debt and then to service it. The only way is through things like tariffs to charge more to other countries. But again, we see what happens when these tariffs come in. But there was an interesting thing that took place with the UK. The 30-year bond issued last week was actually oversubscribed. So what we've seen as well is some foreign investors have been buying UK debt. And you might say, oh, well, that doesn't make sense with what you just said. No, there's a reason why. Because they actually had to give 5.4% on the bond to get people to buy it. Again, that's unsustainable. The government can't sustain that. So you're seeing this crisis playing out. It reminds me of the book, if you've ever read Lords of Finance. I don't recommend it, by the way. It's an extremely complicated read because you've got to be good at finance. You've got to know your financial history. You've got to know history in general. And then you've got to understand how the economics of it linked together with the war that was taking place, World War I, World War II. So it's a hard read, but it reminds me of what happened then in Lords of Finance, where you just had these crazy periods going on where each country tried to get out of it in a different way, and they couldn't. And I mean, next thing you know, you've got another world war, all the reparations from Germany going to all these other countries, which was unsustainable, resulted in, the rise of other things, and we know the whole story behind that. So with mounting debts over whether governments are capable of honouring their obligations, they say here significant risks, premiums are creeping into the price, and that a lot of investors are costing in default into this. In the UK then, the Deputy Prime Minister has urged colleagues to further increase taxes rather than to do spending cuts. So they're actually looking now at how they can increase taxes. And it's interesting that this man says here, it's all about fiddling while Rome burns. He's talking about the UK, of course. He says, a giant fiscal reckoning, global in nature, is fast approaching. The question is not if, but when this storm is going to break. Japan then, their portfolio reshuffle is raising a lot of red flags for US debt. And these charts, again, are pretty worrying as to what's happening. Japan is selling down the foreign debt that they hold. That's the yellow I've highlighted here. And it's not just the US, it's Europe as well. They did hold 2.3 trillion in foreign bonds. This was as at the end of 2023. So this was the last time they reported it. We don't actually know exactly how much they hold now, but I would guess it's well below 2 trillion based on what we've seen just recently. Now, here's another thing. If you're holding US bonds, the US administration has actually come out and said they would like to see a weaker dollar. Now, that may be good for some things, but it would hurt a lot of people if we did see this weaker dollar. But they need Japan to actually assist with that. They can't just weaken the dollar without some other assistance, especially from Japan. Insurance companies, though, are at the moment purchasing ultra long-term bonds. And this has been going on for a fair amount of time. But just recently, so they've been buying them for a long, long time. But just recently, this very short period, they've finally become net sellers. So that's another thing that's happening. The bonds are all under pressure at the moment. So again, ladies and gents, you just got to be really careful with this. But what have they said? To fix the US debt problem, Americans need to retire later. That's what's being put out there. They think that you need to retire later. So we'll just cover one other article here, and then we'll go on to the BRICS nations and what they've announced. Oh, actually, before that, the thing we talked about on Friday around the tariff on the European Union, this 50% tariff. And what did I say I thought it was? It was semantics from Trump, especially understanding him very well and having read all his material and his book, The Art of the Deal and everything else. You kind of, if you know him quite well, you kind of know what his thoughts are. And what I said was I think that was more of a bluff to get them to the negotiating table. So what happened within hours of him saying the 50% tariff, Ursula, the European Commission president, wanted to get on the phone, which she did immediately, with President Trump. And as a result, they've delayed it. What's he said? It was my privilege to pause these 50% tariff, and now Ursula has said that talks are going to begin rapidly. So they're starting right away, and she apologized. So after all that sort of fierce talk, it didn't take much for the European Commission to fold very quickly. The sides have also yet to agree on how to align their trade policies on China. This is a big one. Although the EU has privately indicated it's willing to work with the US to combat Beijing's subsidies for key industries, they haven't yet come up with a long-term strategy. So they're not sure. And remember, the EU said they want to have a closer alignment with China than they would the US. I think they're going to regret saying that, and I think they're going to reverse course on those words. Another one then, if you remember the videos that I did about 5 of them on all of the what we call dodgy payments that happened a while back. Well, the investigation now has pretty much completed to some regards. Doge have completed it to some regards. They've made it quite efficient. They've cleaned a lot of it up. But there is a call now from senators to investigate this $4.7 trillion in untraceable treasury payments. So that is just about to begin. I think we're going to uncover a huge amount of fraud. I really do. I think there's going to be a huge amount of fraud uncovered from this. Let's see then. Let's get on to the BRICS announcement. So what I think the BRICS are doing right now, apart from shifting away from the US dollar, I think that they are deliberately as well. So they're deliberately shifting away from the dollar. They're deliberately trying to weaken the dollar. But at the same time, it's clear that they know they need to strengthen their own alliances. The only wild card to that would be perhaps Saudi Arabia, because we know the Crown Prince, he likes President Trump. So that's the sort of wild card. But the rest of them, I think it's pretty clear what their strategy is. And just to be clear, BRICS isn't Brazil, Russia, India, China, South Africa anymore. It also encompasses Ethiopia, Egypt, Indonesia, Iran, and the UAE. So these are the main ones here. Over 65% of trade among BRICS nations is now denominated in their own currency. So they've eliminated 65% of dollar trade now. This is huge. Transition away from the US dollar reflects the bloc's strategic commitment to strengthening financial sovereignty and reducing dependency on Western-dominated financial systems. They further revealed that discussions are underway regarding the establishment of an independent payment platform known as BRICS Pay. This is intended to facilitate transactions among member countries using their own currencies and bypassing the US dollar. In line with this development, Ethiopia has not only joined BRICS, but it's also taken significant steps to reinforce its position within the group. Since this year, February, they entered into an agreement with Russia to conduct trade in the Ethiopian currency to bypass the US dollar entirely. And it's interesting because Russia's extended this arrangement to a number of other countries: South Africa, Morocco, Algeria, Egypt, Tunisia, Mexico, Argentina, Nigeria. So why? Because they had to. They're out of SWIFT, they can't really do much else. But what this has done is sort of create this cascade effect that we're seeing now. And a lot of other BRICS countries have started to use this because it was so effective with Russia, so they could bypass these sanctions. The move signifies growing momentum within the BRICS bloc towards building a multipolar financial system outside of the US dollar. However, US President Donald Trump has threatened now to impose sanctions on these countries for deliberately bypassing the dollar in international trade. Drop a comment below. What do you think of that? Do you think that's a good thing? Or do you think that's not a good thing? Do you think that's interference with their trade? I'd be interested to know your thoughts. But we also have, this is a huge one actually. So the South Asian nations have said that they're not going to discuss tariffs with Trump independently, but they said they're going to do it as a bloc. This is from the Malaysian Prime Minister. So it says that they have now forged a common front to face challenges, including headwinds from the United States tariffs. They will not negotiate on their own. At this opening summit, which was for the Association of Southeast Asian Nations, or ASEAN, they said that they are meeting to discuss these tariffs and how they're going to address it as a bloc, as a unified front. They said, for ASEAN, our peace, stability and prosperity have depended on open, inclusive, rules-based international order. These foundations are now being dismantled under the force of arbitrary action. They have agreed to avoid retaliatory measures. Instead, they've formed a task force to coordinate a response to the tariffs in line with bilateral negotiations. They also include, okay, so these are some of the bigger economies now. You've got Singapore, Indonesia, Malaysia, Thailand, the Philippines, Vietnam, Cambodia, Laos, Myanmar. They're all coming together to address this as one group. They also said that they met with the Chinese Premier at the Gulf Cooperation Council. So this is when you ever hear the GCC. They said this would spur new cooperation that could help insulate ASEAN's economy. So the GCC is Bahrain, Kuwait, Oman, Qatar, Saudi Arabia, and the UAE. So they're also forming they're coming together as a, so you actually got two huge groups that are coming together then, where they want to now, they're doing their sort of plan here, this group are doing their plan here, and then they're going to come together later before they then, I don't know who's going to be the deal maker with the US, but this will be very interesting to see what happens, very interesting indeed. And they did just launch their 20-year vision to deepen their economic and social integration. Okay, last one then. China, Indonesia, sovereign wealth funds boost investment ties. So Indonesia is actually becoming a huge powerhouse in Southeast Asia. You don't often hear about them talked very much, but they really are. They're becoming a powerhouse. And them aligning with China even more now. They're stepping up their ties, trade. They're going to start looking at trade. Again, they're not looking to use the US dollar. So you're seeing this real powerhouse now forming. And I think this is going to be a big risk. This isn't anything new though. We've been talking about this for a long time. We're seeing a weakening of the Western world, which I think is not a good thing. Let's just say that. I think is not a good thing. We're seeing this weakening of the Western world. I do think we're going to see a shift, and we're already seeing that in British politics. We've seen that in US politics. We're seeing this in other European nations now, this backlash against the European Union or the authoritarian aspects of the European Union. So I think we're on the right track in some regards of what we're seeing, some of the movements. But at the same time, I think the amount of debt that's being created is going to create a real crisis. So by the time this actually comes up, we're going to be in a real headwind here. At the same time, you know, I travel to Asia regularly. I sort of keep my second home in Thailand, as it were. I'm there for a few months every year through the winter. What I'm seeing when I travel around, and again, I always do this with a point of unbias. I have no bias to any country. I go there because I want to look and see with my own eyes what's happening, and then I tell you on the channel. And when I'm there, what do I see? I see massive advancements. I see huge amounts of unity throughout a lot of these other nations. I don't see unity within our Western nations. In fact, it's ununity. We're seeing a lot of breakdown. We're seeing a lot of problems. We need to be more unified, and then we need a more robust financial system. But I do think we're going to have a big problem. I think it's coming, and I've talked about it for a long time, which of course you get the odd person that says, well, a broken clock is always right twice a day, or whatever they say. It always makes me laugh when people say that. And then when the things come true that you predict or you forecast, even if it's only a week, you know, you make a forecast, oh, there could be some bank collapses next week, and then they happen, and then people say, oh, well, a broken clock is right twice, you know, it was a week. It's like, it's unbelievable, really. It sort of makes me laugh. But I would say, again, look at the gold and silver course. If you haven't already, there's a 30-day money-back guarantee anyway. So you may as well give it a try. You've got nothing to lose. The advanced course is where I'm going to teach you all about your pensions as well. How to put a portion, I'm not saying all of it, don't do all of it, but a portion of your pension into some fixed assets. So gold and silver, things like that. How to store it, how to buy it, how to not get scammed. All of these things, how to trade the ratio. If you do have a lot of money and you can't just put it all in a vault, then you can play the ratio, you can do other things. There's a lot you can do. And yeah, I mean, highly recommend it. Give it a go. You've got nothing to lose. 30-day money-back guarantee. With that said then, thank you so much for being online today. I did say it'd be a longer stream. Really appreciate you as subscribers here. And with that in mind, take care. God bless you. God bless your families. And happy Memorial Day to everybody in the United States. All right, take care. Bye for now.